It's another red day, and I've got a problem with this. If we have a look here, red everywhere. Yesterday, my centralized exchange had locked me out and I couldn't get in there. I just transferred money and I couldn't log on to be able to buy more Bitcoin. Then I went into the bank. So eventually I got into the centralized exchanges like, yeehaw, game on. It's a red day. Let's buy the dip. And then I had a look at the payment from the bank and now it's pending. It's been just under 24 hours now. Or it'd be exactly on 24 hours. I did it at the same time yesterday morning. And it's pending, and they're withholding my own cash to be able to buy the dip. So that's a little bit of a pain in the ass. When I see red like this, I think that's a great opportunity to be able to buy more. We'll see what my bank does. We are starting to get this crackdown all around the world, but especially here in Australia, where they are starting to control what you can do with your own cash. So for me, the plan now, and they're just pushing people, the banks are pushing people to buy more and more Bitcoin, get it off the exchanges and take control, become a sovereign individual. So you don't need to deal with the nonsense of the banking system. A couple of things we need to get into today, an amazing article about quantum computing and bank transfers that we will get into. The interest rates, we're going to look at the percentage. It very much looks like they're going to go back up. Let's just jump straight over. Block height 797,342. Market cap is down 1.6%. We're sitting at $123 trillion. Bitcoin in the last hour, sideways action. Last 24 hours down a little bit. Ethereum's down a little bit more. We'll get into that. A lot of red all over the chart. We did see that in the banter bubbles. Bitcoin 30,475, down 1.2% in the last 24 hours. If that money transfers from my bank, they are Commonwealth Bank. I will name and shame. They absolutely suck and they won't be my bank for too much longer. It's a hassle. It's a real hassle. It is what it is at the moment. But as soon as that money transfers, I'll be buying this dip here. And that's what I'll be doing for every dip going forward until after the halving. That's my plan. You need to do you. Ethereum, we are holding above 1900, which is good. Just with Bitcoin as well, we have held above the $30,000 level, which is nice, which is strong. If we just go sideways here for the next week, next 2 weeks, that's absolutely fantastic. Same deal with Ethereum, holding above 1900 would be good to see. It went just below in the last 24 hours, touching 1897. Bit of a nothing burger, quick wick down. If we can consolidate above that $1,900 level, we're setting up to have $2,000 in play very shortly. Good morning, Mark, my man. Good to see you. Couple of things here. Bitcoin price, obviously it's down a little bit, but when it's down 1.2%, it's nothing, absolutely nothing. And that should be considered to still be up. But so in regards to this opinion piece, it's talking about Bitcoin prices are up. They obviously wrote this when as a green day. Nevertheless, a couple of things that they went into is what could really stop this rally. And here's what could crush it. Couple of hiccups. Now they are talking about the FOMC meeting. It was, they did what was expected with interest rates. They've played out exactly as they've stated, and we'll get into that very shortly with interest rates. Bitcoin prices are up 87% year to date and have seemed to have found support above 30,000. ETH holding above 19 and has risen 64% trailing Bitcoin, but still impressive. So what could go wrong? Jerome Powell indicates that the FOMC is resigned to continue in its current course of action, which means continuing to increase interest rates. If we have a look in the CME group, you can see 88.7% chance that they do raise by 0.25%. Most likely, and you can hear it in everything that Jerome Powell's been saying and all the words in his last meeting. He's been telling us what he was going to do, and he does what he's been saying, which seems pretty surprising, but in a way he's not a politician because he's just unelected. They just go into these places. So maybe we do get a little bit more transparency out of Jerome Powell than we do from a typical politician. In saying that, the market appears to be expecting at least 2 more rate hikes in 23, topping out around 5.6. So we are at the tail end of it. The worst is behind us, maybe a little bit more, and we'll see if anything more breaks. They are saying if it only goes up to 5.6%, it's already priced in. Now, I found this pretty interesting about banks past the most recent stress test. So recent stress tests were administered to 23 systemically important banks, show they appear to be well positioned to weather a severe recession and continue lending to qualified households. The test assumes an unemployment rate of 10%, which is pretty big, a 40% decline in commercial real estate, and a 38% decline in housing prices. That article there, so those 23 systemically important banks are fine, but I believe the numbers may be out by a couple of thousand, but I think if in the States there's about 6,000 different banks. 23 are all right. I wonder what happens to the rest. Maybe it's 600. But if only 23 are okay and pass that stress test, what happens if they continue to raise interest rates for everyone else? If you've got over $250,000 in these smaller banks, maybe spread it out. You need to do your own due diligence, but make sure it isn't covered. It is covered with that insurance. And if you hold that much cash, maybe Bitcoin or something else is a better option for you. Worth considering at least. So the FOMC may feel that it has enough room to aggressively raise rates, despite the impacts that may be felt. Subsequent weakness in the economy would be painful, but would likely bring inflation down without cratering the banking system. Depends what they mean on that, and this is going to continue to uncover as we go forward. I put out a prediction a couple of months ago that we are going to see more banks fail. I still stand by that, especially if they continue to raise interest rates. A little bit of propaganda, I think, here, just making us focus on those 23 banks and forgetting about the rest. And looks like we're going to get an interest rate hike. Moving over to the other side of the world, Israel. I wish they'd do this over here in Australia. They're axing crypto capital gains tax for foreigners. So a bill exempting foreign residents from capital gains taxes on crypto sales and lowering tax on stock options like crypto options for employees has passed a preliminary reading. So if it's passed into law, the bill would exempt foreign residents from capital gains tax on the sale of digital currencies and reduce tax on crypto options for employees, similar to stock options, to about 25% from 50%. In Australia, we're roughly at about the 50%, depending on what tax bracket you're in. If you hold it for more than a year, you only pay tax on 50%. But for me, that's still 50% tax. It's pain. So this would be nice. Israel has been working to integrate crypto into its local economy by regulating the sector, with the government proposing guidelines for the treatment of digital assets and requirements for stablecoins. That's good. They're putting a framework in place so the country sort of sits back, they provide the framework, the guidelines, the regulations, and then the industries can flourish. They can work within the frame of the law. Finance Minister has shown support for the bill, as signalling that Israel is embracing crypto. This bold decision aligns Israel with UK and European countries that actively promote the industry, generating employment opportunities through clear regulation. With technology and crypto, Israel has the opportunity to compete with the major financial cities in the world, such as London and New York. We must not miss it, he said. That's absolutely crucial that all countries, governments around the world start to wake up and realize they must not miss this opportunity, because it is changing the world. There is a revolution going on, and if they sleep on it, they're going to miss out and they're going to be left behind. I just want you to know, tomorrow Jarrett will be coming on. We will be giving away this book. It's still in its plastic, the Bitcoin Standard. I've got my copy there, so it is a fresh copy, a safety and a moose, the Bitcoin Standard. Tune in for that one there. Jarrett's a good friend, a very special guest. And then we've got Haley Lennon next week as well, a Bitcoin lawyer or a crypto lawyer. So make sure you are subscribed. We'll jump back into this The digital euro and the P word. Central bank digital currency does not have to be a privacy nightmare, but privacy is a convenient attack vector for critics of CBDCs. Obviously, if you're following me, you're aware that I am a big critic of CBDCs. And just for the reason is once you're in there and you have no cash, you don't hold any physical gold, you have no Bitcoin, it's too late. Once it's in there, it's integrated into the system and they say we won't do these things, but then you have no other option and they start to do those things and they may or may not. But I'd rather plan for the worst and hope for the best. So, end of June, the European Commission proposed legislation, the digital euro, so it could be issued legally should it ever be issued. The European Central Bank has been investigating the possibility of digital euro, and this October it will near certainly conclude that the investigation has been a success and a realization phase will begin. How long will that phase last? Only politics can tell. So why is privacy a problem? Most CBDCs would be issued as a blockchain-based token, which allows the issuer, i.e. the central bank, to have all the data on how this token changes hands. Europe is not even formally committing to using tokenization, and privacy concerns are one of the reasons for this. Legally, however, extremely unlikely that mass surveillance will ever be permissible by a G7 central bank. The EU rulebook will certainly make sure this is not the case. Totally disagree with that. The G7, the Five Eyes, once they bring it out, all they want is mass surveillance and control. That's my opinion. It's biased, but I'd be prepared for it, at least. And what's the worst that happens? Like, you've got a big stack of Bitcoin there and CBDCs are all well and good. Like, that's not a bad option and not a bad route to be able to go down. So, core principle of the digital euro is that the ECB and the payment service providers shall implement technical and organizational measures, including state-of-the-art security and privacy preserving safeguards, to ensure the identities of digital euro users cannot be accessed by the ECB via its front-end solution. To advance anti-money laundering goals, the limits are likely to end up lower than those that we de facto have with cash. So they say one thing and then limits need to be lower, so we are going to track you. If the digital euro gradually replaces cash payments, some of the privacy of cash will be sacrificed. That's the facts. They will be sacrificed. Some, how much? Maybe only 99% of your privacy will be sacrificed, but they'll leave us 1% here. Now, DYDX, this may be a good play for the degens out there for the bull run. If we have a look at it here on the chart, you can see $1.90. I've zoomed out to a year and it's sort of been hanging around, you know, $1.75 to $2, getting just over $3 there, but pretty much sideways for the last year. The reason why I bring it up is because it often comes up in the news, and it's the narrative with these tokens. Like, number one, it's decentralized exchange. That's going to be a big narrative going on next year. Whether it's this token or something else within that narrative, you need to do your own research. But with DYDX, it keeps coming up in the news. They've obviously got a marketing budget, or they're friendly with CoinDesk. And if these articles keep coming out and the markets start getting real frothy, just because they keep placing DYDX in front of people's consciousness, it'll most likely do well, even putting the fundamentals aside. It's got the fundamentals, it's got the marketing, and it's got the fundamentals as well. So the DEX said users can now trade Bitcoin and Ethereum on the public testnet. They're just sort of giving a little bit of an update here. DYDX users will now be able to place market orders on the DYDX testnet, generate private keys, and place limit orders with advanced options. The public testnet has launched with Bitcoin and Ethereum markets, but the company said it anticipates it will eventually include around more than 30 markets as the network upgrades. Currently on Ethereum, version 4 will be standalone based on the Cosmos software development kit. So just keep that in mind there, DYDX. One of the things here, $320 million market cap, fully diluted though is $1.9 billion. So 2 billion, could it go to 10 billion? Pretty easy. It could go a lot higher than that, 50, 100 billion as well, if we get a lot of liquidity entering the market. And I think there will be a lot of liquidity. You know, does Bitcoin by itself, like at the moment, we're sitting at $500 billion market cap, 590 billion. Do we go to 5 trillion this cycle or not? Is that hopium? It's very possible. Maybe even higher. We'll see what happens. And that's maybe one of the positives with BlackRock. But people will be able to push the price both ways as well. So it'll be interesting to see how it plays out. I can see it's going to be pretty insane for sure after the halving. That's, you know, people throw out all these numbers. They're all irresponsible. So we don't really say that here on this channel. You could pick any number. I think multiple six figures is definitely in play. Crypto user moves $160 million of Bitcoin from the Luna Foundation Guard wallet. So LFG, Luna Foundation Guard. Unknown party has moved more than 160 million worth of Bitcoin from a wallet reportedly tied to LFG, the organization connected to Terra Labs and its founder or co-founder Do Kwon. The transfer, 5,292 Bitcoin. Little bit of pocket change there, was the latest in a series of moves of crypto assets from LFG controlled wallets amid and following the collapse of Terra in May 2022. Kwon, after reportedly being on the run for several months following Terra's collapse, was arrested in Montenegro in March for allegedly using forged travel documents. In June, authorities sentenced him and former Terra chief financial officer June to 4 months in prison. So 4 months, $160 million on the move there. Who's moving it? Nobody knows yet. We'll see if we get further information, update on that, and hopefully it's not investors' funds going into a mixer like Tornado Cash. So quantum computing is getting real. HSBC, the world's 8th largest bank, is trialing quantum safe financial transactions on this network. Pretty interesting actually, because within crypto, and especially with Bitcoin, they say quantum computing is quite a large threat and attack vector for the Bitcoin network. It's one of the arguments that comes up all so often. At this stage, definitely not. The technology is very limited, and as it progresses and it becomes more available, they'll just adapt. But I think you'll find this pretty interesting. So listen to this. They will conduct a series of trials and experiments utilizing quantum encryption technology in collaboration with Amazon Web Service, BT, and Toshiba. So developed by Toshiba in partnership with telecom giant BT, the Quantum Metro network is designed to allow unconditionally secure transactions between institutions. HSBC will trial several use cases on the network, including financial transactions, video calls, and edge computing. All on the same network, pretty cool. QKDs are one-off encryption keys generated for both parties at the same time, thanks to what Albert Einstein deemed spooky action at a distance. Quantum states tend to collapse when measured, thus quantum data is deemed impenetrable. For the purpose of QKD, this means any attempt by an external party to view, eavesdrop, intercept, or modify an equipped transaction would be instantly detectable by both parties. Pretty interesting. Scientists in China have published research in May 23 indicating they've successfully sent QKDs across 1,000 kilometers. So they are saying that to be able to send this quantum data, you can't do it over a large space. 1,000 kilometers is the record there. And fiber optics, you can boost it a little bit, but that's sort of where they're maxing out at the moment. Won't matter in regards to this. Won't need that much runway though. The announcement, the test will occur over 62 kilometers of fiber optic cables in England, connecting the bank's global headquarters in Canary Wharf to a data center in Berkshire. Pretty interesting though. Quantum computing trials is here. We are living in the future, ladies and gentlemen. Binance Australia, obviously, last 2 days been having real big issues with my centralized exchange, which is not Binance, it's CoinSpot. And then with Commonwealth Bank, they're all a pain in the ass. It is what it is. And when that money hits my account, I'll be buying Bitcoin, and I'll be preempting, and I'll be sending more money there because I know that 24-hour delay is there. So 100% responsibility. I'll do what I can to turn my fiat into Bitcoin as often as possible every red day. So Binance Australia offices reportedly searched by a local regulator. Not really much going on here. Binance Australia working with local authorities, meeting compliance requirements amid reports alleging the company offices were searched July 4th. Does sound like those reports are confirmed now. Australian Security Investment Commission conducted searches at Binance Australia location Tuesday, Bloomberg reported. In response, Binance chose to pursue a more focused approach in Australia. So this is what happened last time, is they opt to shut down their derivatives trading here. They are still offering spots trading. What the search is in regards to is information in regards to the derivatives trading, any information involved with that operation there. So we'll see if they come up with anything. At the end of the day, I think my feeling is Operation Choke Point 2.0 is real. They do want to move crypto away from these centralized exchanges and allow the banks to sell the bigger cryptos, whether that's like Bitcoin, Ethereum, maybe even BNB. I think that's probably the next move in this game of chess that they're playing here, is the banks are going to start providing crypto for us. That all starts with BlackRock, obviously. All I would say is, if you're not holding your keys, you should get your Bitcoin, everything off the exchange. Tomorrow, we're giving away that book, The Bitcoin Standard. Make sure you hit subscribe. We'll see you on that video. It's going to be a lot of fun. Be blessed. Peace.